Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out if this company is cooking the books or if they are actually cooking with gas. Okay, so we're diving into FirstEnergy Corporation and their subsidiary Jersey Central Power and Light Company's latest quarterly filing, the 10. And let me tell you, electric utilities like these have a lot of moving parts, and this report is no exception. We will uncover the most important numbers, the stories behind them, and what they truly mean for the companies involved. If you enjoy uncovering these financial secrets, make sure you are subscribed. Also, we have a growing community on Discord linked in the description below, where we break down these filings even further. Let's zoom in on the financials first, specifically the consolidated statements of income for FirstEnergy Corporation. For the 3 months ending the 30th of September of 2025, their total revenues were $4.148 billion, which is a nice jump up from $3.729 billion in 2024. That is an 11% increase, and that is a solid move. Now, what really matters is the earnings attributable to FirstEnergy itself, which came in at $441 million for this quarter in 2025 compared to $419 million in 2024. That is a gain of $22 million, and while it might not sound massive, it translates to an increase in earnings per share from 0.73 to 0.76. A good sign that the company is becoming more profitable. Looking at the balance sheet as of the 30th of September 2025, FirstEnergy has $1.404 billion in cash and cash equivalents. That is a huge jump from just $111 million at the end of 2024. It looks like they've been shoring up their cash reserves significantly, which is always a good sign for financial stability. Their total assets stand at a massive $55.884 billion. Now let's look at where all that cash is coming from and going. For the 9 months ending the 30th of September of 2025, FirstEnergy generated $2.564 billion from operating activities. That is a big increase from $1.847 billion in the same period in 2024. This jump is mostly thanks to higher revenues from rate cases in Pennsylvania, New Jersey, and West Virginia, and also from higher returns on their investment programs. But investing in the business also costs money. Their capital investments for the first 9 months of 2025 were $3.539 billion, a significant increase from $2.736 billion in 2024. They are definitely spending money to upgrade and maintain their infrastructure. How are they paying for all this? Well, financing activities provided $2.518 billion in 2025 compared to $1.4 billion in 2024. A big chunk of that came from issuing new unsecured convertible notes worth $2.5 billion in 2025. This shows they are actively managing their debt and raising capital to fund their operations and investments. Let's quickly glance at Jersey Central Power and Light Company JCPL. Their revenues for the third quarter of 2025 were $864 million, showing a healthy increase from $765 million in 2024. Their net income also saw a good bump from $109 million to $119 million. JCPL has $708 million in cash and cash equivalents as of this September. That is a massive improvement from zero cash at the end of 2024, which likely means they've secured significant funding. Their total assets are $11.490 billion. For JCPL, cash flows from operating activities were $381 million for the first 9 months of 2025, a slight decrease from $427 million in 2024. Their investing activities used $877 million. Financing activities provided a strong $1.204 billion in 2025, a much higher number than the $221 million in 2024. This reflects their substantial debt issuances to fund their operations and capital needs. Now let's talk about short-term borrowing and credit facilities. On the 27th of October 2025, FirstEnergy and its subsidiaries amended their credit agreements. They extended the maturity dates and made some adjustments to interest rate calculations. It is important to note that these credit facilities have financial covenants that borrowers must meet, for example, maintaining a certain debt to capitalization ratio. FirstEnergy itself must maintain an interest coverage ratio of at least 2.50 times. As of the 30th of September 2025, FirstEnergy was in compliance with these covenants. Looking at FirstEnergy's overall performance for the third quarter of 2025 compared to 2024, total revenues increased by 11% from $3.729 billion to $4.148 billion. Operating expenses also went up by 11% from $3.002 billion to $3.318 billion. Other expenses net increased by 32% though. Despite these increases, earnings attributable to FirstEnergy still managed to grow by 5% from $419 million to $441 million. This growth was fueled by higher revenues from rate cases and increased capital investments, leading to a higher rate base. They also benefited from the absence of certain charges that impacted the previous year. However, they faced headwinds from the elimination of a transmission rate incentive, higher operating expenses, and increased interest expenses from recent debt issuances. Let's quickly look at electric distribution MWH deliveries. For the third quarter of 2025, residential deliveries were practically flat compared to 2024, while commercial saw a slight decrease and industrial also saw a very minor drop. This indicates stable customer demand overall. The distribution segment saw a healthy earnings increase of $37 million. This was driven by higher revenues from the Pennsylvania rate case and the absence of an impairment charge from the previous year. They also saw some higher operating expenses, primarily due to vegetation management and uncollectible costs. But much of this was deferred for future recovery. So what is the big picture here? FirstEnergy seems to be navigating a complex environment quite well. They are investing heavily in their infrastructure, which is crucial for a utility company. The increase in cash from operations and securing new financing show resilience. However, the ongoing regulatory scrutiny and the reliance on debt financing are certainly points to watch. The company is making strategic moves like the signal peak disposition to streamline operations. Their commitment to renewable energy goals is also noted. Overall, FirstEnergy appears to be on a stable path, focusing on regulated growth and shareholder returns. You'll want to keep an eye on how they manage their debt and navigate the evolving regulatory landscape, especially concerning environmental regulations and interest rate risks. They are doing well in securing financing and investing in their future. What do you think about FirstEnergy's latest performance? Let us know your thoughts in the comments below. If you enjoyed this breakdown of their 10Q report, please give this video a thumbs up and subscribe for more deep dives into corporate filings. And don't forget to join our Discord community linked in the description for more insights. Thanks for watching. See you next time.